Hello, good afternoon, everyone. Noon here, actually, out on the in Vancouver, where I am. And I'm Frances Beulah. I'm the Urban Affairs contributor to the Globe and Mail. And I'm someone who started covering housing 20 years ago when I got a public policy fellowship from the Atkinson Foundation and spent a year studying housing and homelessness. So this is a topic very near and dear to my heart. So I'm really pleased to be the moderator for this afternoon's session. A few housekeeping things just to start. Just a reminder that if you are experiencing technical difficulties, you should email webcast at F for Francis, mav.ca, and someone will try to get back to you as soon as possible. And also a reminder that you can ask questions later on using the Ask Us button at the bottom left side of the webcast screen. So we have about a quarter of the time here set aside for questions and discussion, and we're looking forward to that. Everyone who registered for the webcast will receive a link to the recording. We can see the recording button flashing away as we speak here. So you're going to get a recording. So you can view the event again or see it the first time. You can tell people they can see it for the first time if they had to miss in spite of being registered. And it'll be ready in a few days. So Matt Lundy hosted discussions earlier this afternoon, focused on rental housing and eviction, sort of the tenant point of view. We're going to shift gears a little bit. And I know some people did talk about supply and problems with supply and so on in the morning session, but this is going to be a really focused discussion from people who are very intimately involved in development and supply. To look at, how supply is working, vacancy rates, affordability, and development plans. And I know that this is going to be of a lot of interest to you all across the country because as I said, I read about this all the time. I know that there are low vacancy rates in many cities, real struggles to provide rental housing. Here in Vancouver, you really haven't gone through a week unless there's been some major standoff in some part of the region over a proposed rental project. It seems to occupy a lot of our time. Vacancy rate here at below 1%, I believe Toronto the same, and a real crunch elsewhere. So that is going to be a focus this afternoon. But first off, before we start with the panel, I'm welcoming back Romy Bowers, the Senior Vice President of Client Solutions with CMHC. I listened to Romy early on, talking with Matt about particular issues related to tenants and evictions and so on. As I said, we're going to focus more on the supply end here. And she's joining me now to focus on issues and trends in the rental market. And what we're going to start with, the first question is, what does CMHC actually do? Because in spite of me writing it, the initials 100 times in my life or more, and many of you having heard it, I think many of us are still confused about what CMHC actually does. And when there's an announcement that, there'll be federal support of $184 million in BC for housing programs, as there was just before the election, we're not totally sure what that means. So, Romy, can you just take us through what CMHC does in terms of supporting housing?
Oh, absolutely. And thank you very much for the kind introduction, Frances. And so CMHC, we're Canada's federal national housing agency. So there's a number of things that we do to support the creation of affordable housing in Canada. The first thing is that we have a very strong research and analytics department. So we do a lot of analysis about the nature of the housing market. The second thing we do is we do have some commercial businesses. So these are businesses that earn a return for the government. So we have a mortgage insurance business and also a securitization business. And these serve mostly financial institutions clients. But the thing I think that you're most interested in is that we're also responsible for the execution of what's called the National Housing Strategy. And I mentioned this a little bit earlier, but the National Housing Strategy was developed about 3 or 4 years ago, and it has a very audacious mandate. It represents a very historic investment of $55 billion over 10 years by the federal government to principally support the creation and preservation of affordable housing supply across Canada. So just to give you a few concrete examples of, because there's many programs under the National Housing Strategy, probably one of the key programs is called the National Housing Co-Investment Fund. So this represents $13 billion of very low-cost loans and also contributions to nonprofits, to other levels of government, and also for profits as well. And our aim is to create 60,000 new affordable homes over the 10-year period, and also renovate or repair 240,000 existing ones. And as you can hear from the title, it's called the Co-Investment Fund. So we can't operate alone in making this fund a success. So we work very closely with other strong partners that I've mentioned to make some of these affordable housing units come to life. Another program, and I'll mention this very quickly, is called the Rental Construction Financing Initiative. And again, this is a program similar to the co-investment fund, but more focused on creating affordable housing, but closer to more market rents. So this program, it's a $14 billion commitment over 10 years, just in loans to create housing supply, especially in our large urban areas.
So do you give any direct money or build any housing yourself anymore? I mean, that is what CMHC did, like, before I was born, I guess.
Oh, really? Okay. I think that predates me a little bit in terms of what CMHC used to do before, but we do not build houses directly. We do have some legacy programs where we contribute, for example, income support to some provinces, and we actually still own some co-ops and other social housing, which are sort of legacy programs.
Right. Okay. So I know that you have a really big research arm. I, have the local office on direct dial, so I can help reading rental reports and so on. So what kind of research are you doing on the rental market? Because a lot of people, I'm hearing already, in this panel earlier, and when we had a little pre-discussion, people saying the impacts are going to be quite long lasting of the pandemic and people losing jobs and kids moving back home and so on, and others saying no, it's going to be actually fairly short term. So what kinds of research are you currently doing, and is there any chance that the October rental report will come out early?
Okay. Okay, fair enough. I think can I answer the second part first? Because
Sure.
Unfortunately, we have a pretty strict timing schedule, and we would love to bring things out early, but it takes a long time to compile some of the information. So unfortunately, no, it will be coming out at the usual time. So sorry about that.
Okay, so
Yeah.
your prognostications on the rental market then.
Yeah, so in terms of, and thank you very much for your compliments about our housing market economists. We have an amazing team, in Ottawa, but also based across the country. And they're studying the rental market very closely. But honestly, it is a bit of a crystal ball in terms of what's going to happen in the future. All of us are hoping that there's not going to be a second wave, and that we're going to recover from the economic and health impacts of COVID, but no one's really sure. And we are, like many people have observed, we have observe some easing of the pressure in the rental market in terms of, vacancy rates are inching a little bit higher, and there seems to be a little bit more supply available for rent in some of the supply constrained cities. But the experts tell me that they don't think that this easing is going to last, partly because we've underinvested in the creation of purpose-built rental for so many years, and there's so much pent-up demand And as soon as, and this may take a little while, but as soon as the economy gets going and people start looking for a place to live, there's going to be demand. And you know, and I realize that there's been a slowdown in the immigration or a stoppage in the immigration, but unless there's a change in our immigration policy, we anticipate that immigration is going to drive up demand, provided that people can travel safely.
Right. And then one last question before we go to the panel, and the panelists will be addressing this as well, but what do you, CMHC, you're the two at once, but see as the barriers to more affordable rental housing in Canada, like the primary barriers?
Yeah, and unfortunately, there's many barriers, but I'll maybe highlight a few. So access to financing is one. So the programs I mentioned provide very, very low-cost financing. So we're trying to address that. In addition to that, we, through our mortgage insurance business, we actually provide a mortgage insurance to quite a substantial amount of the private rental stock as well. So our mortgage insurance lowers the cost of borrowing for private owners of purpose-built rental. So we contribute to financing in that respect as well. We also believe that, and this isn't universal, but there are restrictions in municipal zoning and bylaws that can be an impediment to development of personal rental in many communities. And we think that this is an area where there needs to be very strong partnerships between various levels of government to, make changes and in some cases overcome strong community resistance to the creation of rental housing.
Right. Okay. Well, we'll be talking about this a lot more. Thank you so much, Romy. And Romy will come back at the end of the panel discussion and be one of the people available to answer questions. But we're going to move now to our panel discussion with some great experts from across the country, some of whom I know and talk to all the time, or fairly frequently. So first off, Robert Brown, Vice President of Project Generation with Catalyst Community Development Society. And for those who don't know, he's the only nonprofit developer of housing in BC, which means he gets to make a lot less money for doing the same thing that some very big players here do. And he has 40 years of experience in both market and non-market housing development. And your company also manages rental as well, I believe. So yeah. Next we have Asquith Allen, huge Toronto Raptors fan, but secondarily Director of Policy and Regulatory Affairs with the Federation of Rental Housing Providers of Ontario. And Asquith has worked with several cabinet ministers in Ontario as a policy and stakeholder relations advisor. And his organization, or the organization, is the largest one in Ontario, representing those who own, manage, build, finance, service, and supply residential rental homes. So a little bit like Landlord BC, but it sounds like broader to me. Also joining us is Wendy Waters, Vice President of Research Services and Strategy with GWL Realty Advisors, and that company manages the real estate assets of pension funds and institutional clients with over 14 billion in assets, not just rental, but also office and industrial, and then 10,000 purpose-built rental apartment units. But she's most famous in my life for competing with me for Halloween visitors on October the 31st. So, also Sean Hildebrand, and Sean is president of Urbanation, a research and analytics firm focused on the real estate market in Greater Toronto and other regions. And his focus is purpose-built rentals as well as other kinds of housing. So I'm really looking forward to hearing about that. Again, there's a local group that does that in BC, and I'm familiar with them, but not so much with yours. So we're going to start off with kind of one round of questions for everyone, and then I'll maybe do some follow-ups depending on your, like your area of specialization. So I know this is super basic, and some people will say why, but why do we care about the rental housing market at all? Or what's different about it? I mean, for years, there's been concern that there's not enough rental and the vacancy rates are low. I think in 1974 in Vancouver, it was still 0.5 or 1% or something like that. So why do we care about rental, and particularly these days? What has changed? So if you don't mind, we'll go in the order that I introduce people. So Robert first.
Sure, thanks. Thanks for inviting me to participate in this. Obviously, a subject dear to my heart and dear to the hearts of people at Catalyst. And Catalyst is a non-profit developer, owner, and operator of affordable rental housing. And so, in that role, we're often asked, how did we get in this mess? Like, why do we have a problem with affordable rental housing? And often I just mention three numbers, and that is that the between the year 2020 and 2017 in the city of Vancouver, average sale prices rose 365%. Rents increased by 80%, and incomes increased by 18%. So right there, you see why we're in the crisis that we're in, because there's a complete disconnection between the price of owning a house or a condo or a townhouse and incomes. So with the result that you have average income for a single person household in Vancouver is $38,000. Average rent for a one bedroom is $2,000, which actually, to be affordable, needs an income of $80,000 a year. So we're actually like 100% off, right? So we have huge instability in our housing market, and people are moving, and people are being asked to move and forced to move. And so we have this perfect storm that has been created of more people staying as renters, immigration coming into certain provinces, which is adding to the rental demand. We have very limited supply, and we have loss of existing stock to development and also to things like Airbnb. So with all of that, we have a significant rise in rents and a huge instability of housing. And COVID has only exacerbated that problem. In the buildings that we own and operate, we had some buildings that overnight 30% of the tenants became unemployed. I mean, that's a huge impact to them and to our housing. So I think what we're looking at is a very high number of people who are going to be renters, and nobody really wants to talk about it, but we're looking at renters for life. And our entire economy is not based on that. So we're going to have to look very seriously at that. So in short, is there demand for rental? Like, unquestionably, and it is huge, and it is getting worse. So we need to find solutions, which we will talk about later today.
Right. And just for one number that I'm hoping you have in your head, your project that you built on church land at 41st and Oak, how many people applied for how many apartments there? Do you happen to remember that?
No, I don't remember on that particular project, but I know that we had we had 300 applicants for 49 homes in a project in Victoria. Right. We had over 300 for a project in Penticton that we finished, and all madness aside, we actually had three townhouse homes in New Westminster, and there were over 200 applicants. So yes, there is demand there.
Yes. Okay, Asquith.
Thank you.
Why do we need rental at all, and how is it changing?
Thank you so much for inviting me to be on. Happy to be part of the panel. If I had to sum it up in 3 words, it would be what Robert said as an answer. But definitely, in 2020, rental housing has, in essence, become the housing of last resort because of a lot of those demand pressures. We see that here in Ontario, especially in the 3+ bedroom market with very, very low turnover and vacancy rates. There are a lot of larger families who are doing everything they were told by their parents and by Hollywood that they're supposed to do in terms of finding the good job and saving for that down payment. And as Robert said, we do have a situation where incomes haven't necessarily kept kept pace with home ownership prices. And so it does create a lot of pressure in the market. I do think that pressure is temporary, and as the economy gets back to quote unquote normal, we will see that pre-pandemic pressure, I think, return. And we do have definitely some data to back that up. FRPO just put out a report today. That with the help of Urbanation, and Sean Hildebrand is also on our panel, that says as a projection, we're going to be behind in the next 10 years with respect to rental units in the order of about 200,000, which is some very serious numbers here in the province. So we do have our work cut out for us, but all in all, it is the type of housing that folks are forced to be in, and because they're forced to be in it, they sort of get to understand, because they're living in it, the economic dynamics and that relationship between the landlord and the tenant, as rental is now a necessity and not necessarily the place where you can park yourself and for the next 5-7 years until you're able to save that 20% to go and buy the home.
So that's interesting. So do you think that because more people realize they're going to be tenants for life, that they will start pressing for changes and trying to alter that traditional relationship of tenant-landlord?
And I wouldn't say changing the relationship per se. I think I can speak for the entire country in terms of those relationships, in saying that, there is the overwhelming majority of good landlords and good tenants. It's just that the constant lack of supply and the sort of, frankly, the bit of a lag at municipal planning departments in getting some of these projects approved, which has definitely helped create the situation that exists. So if we were able, as the report that we did commission, which is on our website, FRPO.org, as the report states, if you want to look for solutions, at least one that we propose is infill development, where if you're taking the excess land on a site and trying to bring that to its highest and best use, as a lot of folks in the industry will know the term, we can definitely push the ball forward in terms of closing that supply gap and evening out the market for both landlords and tenants.
Right. Okay, Wendy. So GWL manages 10,000 units. What are you seeing among the renters of those units, and why do you think we all need more?
Well, we need more rental units, and I would echo what the previous panelists said in terms of the various factors that have been driving up the cost of rental housing, the cost of ownership housing, and we've been seeing a lot of population growth in the regions that we operate in, which include Toronto in particular, Vancouver, Calgary, Edmonton, Montreal, big population growth, and that's coming from job growth. Toronto and Vancouver at various times over the past 5 years have had 1-year rates of job growth in the 4 to 5% range, which is phenomenal for cities that big. Calgary was doing it during the oil boom, and that creates pressure on the housing stock if we can't keep up with people coming in to fill these jobs. And Robert mentioned the ownership going up. I think the cost 300%, and I think rental going up 80%, and average income's not maybe only going up 18-20%. But then with some of these people coming in for these good jobs, and a lot of them are the tech jobs in Toronto, the financial services tech industry, fintech as well, has had a lot of job growth. Those people are getting paid very well. And so they're able to get the rental housing. And when they come to these cities or they get their jobs out of university, they want to rent. They're not looking to buy something yet. They're not in that spot of their life. So they're able to afford what's available on the rental market. So that's one reason we need some new stock to help put these, people coming in with the good jobs, they find some rental stock for them, so that what's traditionally our affordable rental, which tends to be maybe 20-year-old stock, is available as well in a market, in a market rate. So that's one reason We're seeing the pressures. One reason we need more rental is we're seeing job growth and industry growth, and the tech sector is one example. The growth of the Toronto-based global banking is another example of a lot of job growth over the past while. And then as for our company, because we do office space as well, you know, looking at who's going to fill the new developments of office, we do keep an eye on what's the housing supply available, because at a certain point it could create some pressures on economic growth to not have housing for the people that want to come and take these jobs. And you know, and in addition to take these jobs, there's all of the rest of the urban environment that it's so important to have rental housing for. And we could call it workforce housing. You know, the person finishing their master's degree who's also working in restaurants and cafes, that's just important that that person has good access to good rental housing. And we need that to have vibrant urban communities, which is what we all want. So that's some examples of why we need rental and the challenges, and you know, and similar, I guess, to the FRPO research, we've done our own research on pent-up demand for housing. And you know, we looked at the 2016 census. The number of adults aged 25 to 40 living with their parents was approaching 300,000 in the GTA, and almost 100, sorry, in the 92 to 100,000 in the Vancouver market, for example. So, you know, in terms of why we need rental, there's people that just don't have, there's not enough housing for the number of households we have. And that's another challenge. And it's one of the things with COVID that's not going to go away. It may be a pause, because right now, if you don't have if your job's not stable, you might stay in your parents' house. But once this is over, there's going to be a lot of people even more keen to get away from the family they've been stuck with for the past 6 to 8 months.
Okay, great. And Sean, you really focus on supply, the statistics looking at supply and who it's targeted to, who it's not serving, and things like that. How would you answer that question about what is happening to the rental housing market, and why do we need even more rental than is being built now?
Well, thanks for having me. I think, you know, the biggest thing here is that we have an opportunity that we can't miss, because you know, we still have the chance to play catch up here, and to put some sort of local numbers to what's happening on the demand and supply front. As Asquith just sort of mentioned, we recently released some updated research that suggests that rental demand in Ontario is at a generational high. We're seeing demand for 40,000 units a year, and more than half of that is within the GTA. And this is representing a remarkable shift from even, you know, not that long ago. You know, take into consideration between 1996 and 2006, Ontario and GTA were losing renters on a net basis each year. We were seeing a net outflow. We weren't actually seeing net increases in the number of people living in rental apartments. And you know, you can go back to that time and look at housing affordability and all of the sort of accommodative policies that were in place to encourage people to move into the ownership market. But, you know, things have changed, and they've changed very dramatically over the last decade. And, you know, a lot of the factors that were already discussed, such as net migration to Ontario has hit 200,000 people a year over the last couple of years. Ontario added over 200,000 jobs last year. And, you know, even though we're seeing immigration levels down 50, 60% this year, there are very aggressive federal immigration targets over the next several years. And I think the government recognizes that the only way for Canada to maintain population growth of 1% is to meet those targets. And when you look at where new immigrants arrive, close to half of them come into Ontario. So as immigration policies remain accommodative, you're going to continue to see a strong inflow of renters. Now, when you look at sort of the ownership market, it is very, very difficult to get in as a first-time buyer in Ontario and in the GTA. Housing prices in Ontario have risen by about 90% over the last 10 years. Incomes have increased pretty close to what Robert was referencing out in BC, about 20%. So virtually what you're seeing is housing prices growing 4 times faster than incomes. And on top of that, even though you have, you know, record low interest rates, you have mortgage policy that's tightened, you have stress tests. So it's gotten to a point now where the average qualification mortgage level to get into the average priced home in the GTA is close to around $4,000 a month. You need to be making well over $100,000 in income in order to qualify to buy just the average priced home in the GTA. And unfortunately, renters on average don't earn that level of income. Now, as Wendy alluded to, we are seeing a greater inflow of higher income renters coming into the market. The average rent is actually affordable for the average renter in the GTA. When you kind of do the math, the average income for a renter is about $70,000. The average rent is around $2,200, $2,300. So it represents, 35, close to 40% of their income. And you would maybe consider that to be affordable. But to get into the ownership market is very challenging. And this is one of the reasons why we've seen per capita housing sales in Ontario actually drop to their lowest levels in 20 years. And in fact, I would argue that homeownership rates have already peaked. In fact, when you look at the census data, it shows that homeownership rates hit a high in 2011, and then they dropped in 2016. And the latest data would suggest they've fallen even further. And when you look specifically within the prime first-time buying age group or your prime renter age cohort between the ages of 25 and 34, homeownership rates have dropped to their lowest level since the 1990s. So there's going to be a generation of people coming out of school and getting jobs for the first time. More than half of them are going to be renting for their full life, right? So this is a very, very significant change from what we've been seeing over the last 20, 30 years. On the supply side, we've seen some improvements, and I'll credit the development community with increasing rental construction starts basically to the highest levels that we've seen since the early 1990s. But when you do the math, we're still seeing, as Asquith mentioned, a massive deficit, 20,000 units a year. So that's layering on the purpose-built rentals that we're delivering. That's layering on the secondary rentals that are coming from the condominium stock. And the outlook, it still looks pretty dire when you look at the trajectory for both demand and supply. And I think one of the key things from a research company that looks at both the condo and the rental market is that we've come to recognize that you can't rely on the condo sector to supply all of the rental stock. And we've been relying almost exclusively on condo investors to supply new rentals in the GTA, basically 90% of the supply built in the last 15 years. And, you're going to see a huge shift in the next 4 or 5 years in that composition as investors. They're going to face extremely difficult circumstances in trying to achieve cash flow on the units that they've been buying over the last couple of years at $1,000 a square foot plus. So, I think there's a lot of competition out there in the market between condo developers and rental developers. They're all kind of competing for the same land, but that makes the economics of it difficult. And from our perspective, we see still a very strong opportunity for rental developers to come in, and for policymakers as well to come in and create initiatives that allow for us to eventually close that supply gap. It's not going to happen anytime soon, but maybe in 10 years we can get to a point where we can finally achieve a steady state where we see vacancy rates at maybe 3-4% and a much more balanced market overall.
And I just want to make sure I got the math right. You were saying there is a demand for 40,000 rental units a year. There's a 20,000 unit gap. So you're providing about 20,000 a year through both purpose-built and condo investors. Is that about right?
Yeah, last year we didn't hit anywhere close to that, but I would say sort of the outlook based on the number of units that are in development right now would suggest that, yeah, we're still going to see a deficit of about 20,000 units a year. Now, it's not 20,000 units a year of market rents that are located right downtown, right? We're not seeing demand for 20,000 units of those, but we are seeing demand for 20,000 units across the board, which is probably another conversation we need to have about how we need to think about the composition of new supply that's coming in to satisfy that gap that we're recognizing.
Mm-hmm. And maybe you can expand on that in my next question. And I'll ask everyone to give a pretty short answer because I do want to get to questions in about 6 minutes. What I know there's many factors, and Romy talked about some of them, but what would you say, what would you identify in your world as the #1 biggest barrier to creating rental that works for the current market? Why don't we switch around? Wendy first and Sean and yeah, go ahead, Wendy.
Okay, well,
biggest barrier.
Biggest barrier is confidence, in a word, and it's confidence that we can instill in our investor clients, who are typically pension funds, that if we are able to buy land at the very high prices that land have and then construct rental, that the rents are going to be where they need to be for them to have enough return on this investment that they use the rents to then pay their unit holders. That's how pensioners get paid in part. And so access to good data, which Sean's company has been very helpful on in terms of where are market rents for the newer products. So Sean's company with the condo rents has been very helpful in us being able to anticipate what we might be able to get in purpose built. But there's still a need for confidence, not just on that, but confidence long term, because for our clients, we build and we hold for maybe 25 years. That's the goal. That as rents, as costs and operating costs go up, that rents will be able to keep up with those. So it's that confidence in the market to be able to pay to get started, get the project started, that in the end, that the math works out effectively. So as I said, more data, CMHC data is great. Unfortunately, it's only once a year, but it's very good data, and having more interim data. And whereas, I watch the US markets and we're involved a little bit in the US, and there's a lot more data points available, which just helps de-risk things somewhat. So that's a challenge we have in Canada, that creating confidence.
Okay, Sean, as I said before, you said there is supply, not as much as needed. And then also the supply doesn't always match kind of the bands of income. So what would you identify as number one in providing supply for the different sectors that need it?
I would say it's getting rental built in more affordable areas. It can't, as I mentioned earlier, it can't all be downtown. In fact, one of the things that we've been seeing during COVID-19 is that the downtown rental market in Toronto has been hit the hardest. Rents have declined 10 to 15%. We're seeing a lot of supply come on the market, not only from newly completed projects, but units that were formerly being operated as Airbnbs. And the rents are starting to come down there as a result. But the other markets surrounding the city of Toronto in the 905 region, they've seen rental market conditions remain very, very stable. And I think it really does speak to the fact that there's such a lack of supply in these markets. There's been virtually no new purpose-built rental supply built in the suburban regions of the GTA. And there's demand for rental right across the board, right across the region. So I think we need to, look at the diversity in supply to meet sort of the diverse levels of demand that we have in the rental market. When you look at, rental composition, the fastest growing segments of rental demand in Ontario are couples, two-person households, families, relatively higher incomes, but, they're not necessarily living right downtown. And, we have a situation where these households are in fact living in single detached homes and semi-detached homes, and they're occupying those sort of secondary units in the 905 region, whereas there's a very strong degree of pent-up demand for professionally managed new purpose-built rental apartment projects in those areas. So I think we need more supply, not only in these more affordable areas, but the supply that meets the demand, that encourages more mobility in the marketplace. In fact, one of the findings that we've come across is that there's a very large number of single-person households that are living in 2- and 3-bedroom rental apartments because it's simply more affordable for them to stay in those units than move because they're rent controlled. However, if there was supply that met their needs, it will allow them to escalate up into a newer unit and then free up that supply. And then that sort of filters down to, sort of lower income households. So, there's a whole lot of different factors here working together, but, it still remains the case that 2/3, 70% of all the new rentals that are being developed in the GTA right now are located still right downtown because that's where the economics work best, right? Economics are a little bit more challenging out in the 905. Development costs are higher. The rents are lower. So I think, there needs to be some sort of policy encouragement, and Asquith and I can discuss some of the findings that we've come across in our research with respect to encouraging infill intensification sites in more affordable areas to start to bring more supply in.
Right. I was going to ask you, why is there not supply coming in the affordable areas? But you just answered my question. So I'll go to Asquith. Biggest barrier. Is it the rent? Is it rent freezes?
No, but we could talk about that for some period of time if
okay, let's leave that for the audience questions maybe.
Yes. So I mean, amongst cost and approval delays, I would say overall I think it's that the time it takes to actually get some of the product to market. It's taking 6, 7, 8, and depending on where you're looking to build, and because of the current planning policies that are to be phased out, so to speak, here in Ontario, partly due to the councillor, the municipal politician you're dealing with, it could take even longer based on how many community meetings they require you to have, and the response from some of those community groups to the projects that you're looking to build. And so it is a good thing that we're sort of moving away from that system where each councillor sort of has a fiefdom of award, so to speak, in terms of being the person you have to speak to in terms of building. But that definitely is a large barrier in terms of getting units built. We have members, who are putting in applications for a site where they're trying to build 2 towers of, let's say, 20 or 25 stories. And after a residents association has their way with the councillor, it's 1 tower instead of 2, and the proposed density decreases by 15-20%, just because that's what some of the homeowners want in terms of their view of the CN Tower and other attributes of the home that, yes, they did purchase, and that's probably part of why they purchased it. But the country, the province, the city is growing, as Sean said, with respect to immigration. 47% of folks landing are choosing Ontario, and the large majority of that are choosing the GTHA. So we need to be building not just for the people who are here and the people who are, younger folks who are growing up and going to school and looking to live on their own here, but also for the folks that are coming. And to that piece, and I don't want to take up too much time, the only thing I'll add is that a lot of in terms of the demand, the pre-pandemic demand pressure returning, a lot of the applications and the immigration processes at the federal level are still accepting applications. And so that's another factor and another segment of the demand pressure that definitely will tick up once things sort of return to the quote unquote new normal. So we do need to be building to prepare for that.
Okay, and Robert, quickly, your top barrier?
Sure. I find it interesting.
Yeah.
I find it interesting that the nonprofit guy is the one that mentions that money might be the barrier. And the barriers are different at different points on the housing continuum. So the barriers that we see at the deep affordability at the end, so the solutions that are trying to solve homelessness, are obviously public capital grants. So that's donated or granted money. And also the provision of services that are going to support people in those. That's the money barrier at that end of the continuum. And just the 2 money barriers that we have in the point on the continuum where we built housing that serves people earning $25,000 to $80,000 a year. That's our typical kind of provide housing that's affordable to that household income. The 2 points are access to low-cost financing, and CMHC mentioned earlier the RCFI program. That drives huge affordability on our projects. A project that we're doing, we're able to deliver affordability that is equates to $500 per month per home, more affordable than where we started at. And there needs to be more of that money made available to deliver housing in our point on the continuum. And that needs to be low cost and long-term, long amortization. And that enables the rare public capital dollars to focus on the deeper affordability end. And then the second piece of capital or money that we need is working capital. So that's getting projects from where we prove that they're viable projects through the planning and approvals process, but we need to get them to construction. Low cost, long-term revolving money for that, and again, loan money. And we're in the process of working with Van City to create what we're calling our Affordable Housing Accelerator Fund. And that provides that working capital to nonprofits that want to develop their land for more affordable housing.
Okay, thanks. I had another round of questions, but we don't have time for those. We're going to go to the audience here and also include Romy. And in fact, I'm going to give the first question to Romy. So someone has asked, the funds in the National Housing Strategy to retrofit existing rental housing has been very hard to access and slow to be released. What is CMHC doing to make these funds flow more easily?
Okay, so first of all, I'm very sorry that this person has had difficulty accessing it, and this person should feel free to contact me, and I can try to help her out. We have it's been only 2 or 3 years since we've actually set up some of these new programs, and I think there's no doubt there are a lot of growing pains at the beginning, and I I apologize for the inconvenience that we've created if we've fallen short. Having said that, CMHC staff are fantastically dedicated to making these deals happen. And we have a target this year of improving our processing times by 50%, and we're actually on track to deliver. So there were a few rough patches at the beginning, but there's been amazing progress. And we always welcome feedback from our clients on how we can improve our processes. So I really appreciate this person making this comment.
Okay, and you said people can get in touch, so home phone number, cell, email.
I might not do that, but you can find me on the internet, so please contact me.
People can find you on the internet? Okay, great, good.
Yeah.
I'm going to ask a bit of a different one because nobody addressed this. Is there any movement that anyone knows of for rent-to-own projects anywhere in Canada? Like I'm aware of Toronto has, I can't remember the name of the program, but I've done a story on it. But is there anything, and does that seem like a good prospect to help out in any way? Anybody know?
I've seen some market developers in the Vancouver area advertising rent to own projects, and for most of them, what we've seen is that you can rent homes in the development, and then that rent can be contributed to, or a portion of that rent can be contributed towards a discount on purchasing a home from that same developer. So that's a kind of one version of rent to own that we've seen.
Right, and I'm trying to find the name of the Toronto program. I'll look it up. But in the meantime, the issue of rent freezes is coming up a lot. American states and cities are putting in or talking about rent freezes. BC reduced the amount that rent can be increased. I'm not quite sure what the situation is in Ontario. So Asquith and Wendy, what is the impact of rent freezes?
I'll let Wendy go first.
Oh, okay. I was going to say I wouldn't mind having Asquith go first for that. Well, it's back to the issue of confidence. Obviously in COVID times, we all know it's extraordinary circumstances. So I don't know that I would comment on a COVID decision, but in general, we like to see, and any landlord likes to see, the potential for rents to keep up with the escalating costs of operating a building. And so when that looks like it's going to be challenged, that might discourage investors from building more rentals. So I think that would be the challenge. It's not just us. I'm sort of talking more about the industry in general. That if we don't have confidence that we can, continue to run a quality building, provide the services that renters expect, provide the amenities that renters expect, and still be in the black, then there's a challenge there. So that would be, I would say, in general, the challenge. Obviously, COVID times are extraordinary, and we all know we're working with tenants who are having financial troubles and so forth. I think any good landlord is doing that. So that's sort of a separate conversation. But maybe I'll let Asquith talk about it from the FRPO perspective.
Definitely. Rental housing isn't some, get rich quick scheme with the low sort of margins that folks deal with in this industry. The guideline increase here in Ontario was set or was to be 1.5%. It's based on a calculation that comes from Section 120 of our Residential Tenancies Act, which is the legislation that governs residential tenancies in the province. And so the decision was made to do something different and to freeze for 2021. Folks can check. I believe it's the August 28th. Ontario Gazette, where that's required to be published as a matter of law. And these things, we like these kinds of processes because it allows our members to plan better for the future, especially, yes, in this environment where you do have a pandemic that's definitely taken its toll on the economy. But there are some increased costs that a lot of our members are facing that they do have to try and account for while making things operate smoothly. So definitely a wrench in terms of the fiscal planning for a lot of our members, and it's something that we hope is at the end of the day going to be time limited, so that we or our members can return to attempt to catch up with inflation, which is pretty much what the guideline is almost being able to do.
Okay, thanks.
I would maybe just add from BC's perspective. So we would argue that the current requirement, which limits rent increases on existing tenants, is a very important part of the equation for delivering ongoing affordability. Last year it was 2.4%. This year it's 1.4%. Interestingly, in our projects, we've actually we didn't implement the full increase. We reduced to 1% because that's what we needed to increase our rents by to keep track with the increases in expenses. I think when there's been a lot of talk about limiting increases in the market, so if a unit becomes available, what can that home be re-rented for? I think if restrictions were put on that in the market, I'm not talking about in our affordable rental housing, I think you'd see a dramatic slowdown, even greater slowdown in the delivery of new market rental housing, which is an important part of the continuum. So I think that would be a tough policy to bring in that would adversely affect the whole continuum of housing.
Okay, thank you. I have loads more questions, but we've run out of time. So I am going to have to close this part off and invite Romy back for some closing remarks. Go ahead, Romy.
Okay, great. Thank you very much, Francis, for chairing a really great panel. And I just want to thank the audience for joining us today. And we were so pleased to see the high number of registrants for this event because it shows the interest that Canadians have in rental housing across Canada. And for me, at least, it shows a willingness of people in Canada to be part of the solution in terms of making our housing system better. CMHC partnered with the Globe and Mail on this event because affordable housing is our sole objective, and it's the reason why we exist as a government agency. As I mentioned earlier, we have a very noble and ambitious aspiration, and our ambition is that by 2030, everyone in Canada has a home that they can afford and that meets their needs. And we know very well that CMHC, we can't do this on our own. And we need many other partners to come to the table. And we also need to hear diverse voices. And what's great about an event like this is that it allows us to hear those diverse voices. The National Housing Strategy has made really significant inroads in providing funding to invest in affordable housing, but it's absolutely crucial that we have new partnerships and ideas that will deliver the best results for Canadians. So I just want to thank everyone for sharing their ideas, and I hope the conversation continues. So with that, I want to say thank you to everybody.
Okay, and thank you. And yes, I feel like we were all just getting started here. I had so many interesting questions on the list, and I know coming from the audience. So I'm hoping that maybe there will be another one of these sessions where we can dive into, you know, just one aspect of all of this. But I'd really like to thank everyone. Thank you, Romy. Thank you to all the panelists, Asquith, Robert, Sean, Wendy, for your amazing, great insights. And on behalf of the Globe and Mail, I thank all of you for participating. Feel free to get in touch with me if you have other ideas of stories I should be doing. So, okay, thanks again very much.